Good afternoon, traders. Welcome to today's end of day market commentary brought to you by Snipe the Trade. Now, today we're going to review the GBP Japanese yen trade that we have going on right now. And as you can see, we are now on a free risk trade. And if you don't remember the trade signal, well, it was at the breakout of this bear flag. We also went long on the GBP yen this week from the bounce of the 53.64 level, and we our targets got hit around the 57 or the 56.80 level, if I remember correctly. But in any case, I'm going to explain what's going on with this pound yen trade and why we are actually trading both the up and downside of it. Now let's zoom in a little bit, and first of all, let's draw some Fibonacci retracement levels. And as you can see right here, well, we are about the 38.2. We bounce off of the 38.2 level, and I'm going to get rid of all the Fibonacci levels that I don't actually going to use. So we went from the high to the low on a very on a very strong down move for about 1,000 pips, and then retraced back to the 38 to a very shallow retracement given the strength of the down move. But still, we retrace back to this area of previous supply right here, which I was expecting. I was expecting it to hit actually, and we were actually long when this area got hit. Okay, and because of our trade our trade mechanism, we don't like to trade without confirmation, and that's why we have such a great win ratio in our trades. But this was a great short opportunity. Now, the thing about that short opportunity, if we go back to the hourly chart, well, you can see that it was actually a very strong bull trap. Now, because we know how to place our stops, we wouldn't have been stopped out on a short trade after this candle. But again, like I said yesterday, this is not a rejection candle of the um, of the 38.2, but this was a fat finger to a Brexit poll. And we like our technicals, so we actually went short after that. After that bear flag broke to the downside. So if we go back to the 4-hour chart, let's see what might happen in terms of structure. Okay, now we hit about here the 161.8 Fibonacci expansion level, and if we look correctly to the expansion levels, I'm actually going to cheat and just expand the last leg of the move right here. So I'm going to use the 161.8 and the 261.8. Okay, and just let me delete the rest of the Fibonacci retracement levels and use a bright yellow for this one. So you can see that we hit the 261.8. Okay, and this 261.8 is just a retracement of the last leg up, or the expansion of the entire move. It's the same thing. And well, if you don't know how to use Fibonacci retracement and expansion levels, and why we draw them the way we draw them, well, you're welcome to look into one of our flash courses about Fibonacci retracement and expansion levels. But in any case, the structure of the market is very bearish at the moment, and what I'm seeing right now, if I zoom out a little bit, is uh, a complete breakage of this up structure, and we are now making the first lower high after 1,000 pips. So this trade might actually yield more than we have bargained for. And the reason it can yield more is because if you look closely, we went down 1,000 pips, then we retraced to the 38.2 for about, well, retrace back to almost the 50 for about 500 pips. If we go from low to high of the move, we retrace the 500 pips. And now that we are short, we are targeting about 228 pips, but it can be very, all these lows can be very, very easily tested. So in the upcoming days, we are going to manage this trade, and if we see some strength to the downside, all of you subscribers that trade with us are going to get notified about just closing half of your position and maybe moving your stops for a further move down, and maybe get an extra 200 pips, or maybe we are going to decide to end the trade at the well, at the targets that we already calculated. Okay, now this is the pound yen, and well, the targets that we calculated are due to this low right here. Okay, even though the real low that we should be targeting is the low of the down move, this is the low that got rejected when we went down, and well, we found buyers right here, buyers or sellers closing their short position, which is the same because that gives bullish momentum to price action. But in any case, this is the low that was tested and rejected. So this is the low that we are retargeting right now for our short position. And well, it has been kind of a choppy, and this is the thing about forex. Sometimes you get on a trade, and it's going to chop up and down, and even more in the pound yen, which is a monster. That has an ADR, or an average daily range, of more than 200 pips. You can see that basically we have moved up and down in a range of about 90 pips, if no, 100 pips if I'm not mistaken. And well, then we got out of the money a little bit before we started to come down. Right now we are testing the 155 level, which has been broken. If we go to the 50 minutes, remember that we don't trade the 50-minute charts, but I just want you to see that the 155 level actually got broken right here. And well, this is some clear bearish signals going on the lower time frames. If we go back to the hourly, well, we are expecting a continuation of this move to the downside, but because of how slow it has been, we have mover stops to break even, and we have secured 18 pips. Okay, I know 18 pips is nothing, but we need to manage our risk correctly. Now I'm going to show you the second signal that we sent out today, and this was a very, very nice signal on the FTSE 100, where we found some bullish momentum right at well, right at this structure of support. Now let me just change the color of this rectangle because it's killing my eyes. All right, so here is the area of support where we found some bullish action at the London opening, and not only that, we have a very nice bullish engulfing candle right here, a 4-hour bullish engulfing candle, which is very strong. Then we have a bullish continuation, and as you can see, we have a slightly better than a 1-to-1 risk to reward ratio, and we are just well, aiming the top of the up move. And the reason we are aiming the top of the up move is because we do have some very, very big resistance going on right here. Okay, not only this level was tested um, a couple of times, but we also have this gap going on, and we have some very, very strong bearish reaction to a fake out of the level. So we are going to trade safely and just get out for about 350 pips on the FTSE. And I don't think that well, this is going to have to wait till tomorrow, but I think that a continuation of the movies do. We are making higher highs. We have well, we have the first low here, then we have a high here, then we have a low here. Now, if we consider this a new high, then we should not have traded this long opportunity, because if we consider this spike to be a new high, then a new lower low is due, and we would have to be well, we would be stopped out on our trade. We do think that um, if we calculate the retracement of this move, okay, we are going to calculate the retracement of the move. So we retraced between 50 and 61.8. And let me just get rid of the extra Fibonacci tools. I'm sorry, the extra Fibonacci levels. And if we retrace 50 to 61.8, well, the logical, I'm sorry, I meant to grab the expansion tool. The logical target for this move should be around the 161.8 Fibonacci expansion, okay? Now, let's go and see if we do have the 161.8 Fibonacci expansion in our properties. 61.8, 1.618. So basically, the target should go all the way up here, okay? Now let's zoom in. We are in the 4-hour chart, and let's zoom in and let's see if we have some levels going on around those, around the 161.8. And basically we do have some levels around the 61.8, which is this one. Well, this very strongly tested at the 64.35 level, okay? This should be our long target for that long trade that we have going on the FTSE, but because we trade safely and we don't know how we are going, how the FTSE is going to react to the 63.18 level, we are going to close our trades for a nice 350 pip win. If we had a long position from the 61.69 level, we would definitely see that through. Okay, see that trade through, and wait for a real reaction of this level, maybe a breakout and a continuation, maybe another lower low before we break to the upside. But because we just got into this trade, we are just going to trade this small leg of the FTSE. And basically this is what we have going on. And like I said, today was a very quiet day in the forex markets, and there was nothing going on the euro. Well, the euro rose about, if I'm not mistaken, about 50 pips or so. And let me see. Well, it did break out of this strange triangle that it was trading inside of, but really, this is not a price action that we are going to trade here at Sniper Trade. We rather trade a nice continuation of a down move, like on the Japan and on the pound yen, okay, where we can yield 230 pips, then trade a choppy euro US dollar price action that will yield 42 pips. So basically, this is what we have going on right now. And thank you for joining us. And if you want to get notified when we go live, then you should subscribe to our YouTube channel now. And of course, if you want to get our trade alerts, you should subscribe to our trade service or our trade alert service at snipertrade.com.